दोस्तों नमस्कार। तिलहन, दलहन, मसाला, कपास, गवार सीड, सोना चांदी, मेटल, इन सभी के भाव निशुल्क एक वेबसाइट पर उपलब्ध हैं। खाद्य तेलों में सोयाबीन, सरसों, पाम ऑयल के भाव एवं रिसर्च रिपोर्ट्स एक ही प्लेटफॉर्म पर उपलब्ध है, तुषार ग्लोबल सर्विसेज .com। बिल्कुल देखना ना मिस कीजिए। यदि आप व्यापारी हैं, मंडी के कमीशन एजेंट हैं या फिर हैं किसान, इन सभी के लिए निशुल्क विशेष भाव एवं रिसर्च रिपोर्ट के लिए विजिट करिए तुषार ग्लोबल सर्विसेज .com।
Good morning, everybody. I Tushar Jain, CFO and Research Head of Ajay Astro Money Guru. Welcome all of you today on 7th October 2022. As you know, in this episode, we discuss about the Indian stock markets and what all things you need to consider for next few trading days. So let us first look at the global markets. If we see in the yesterday's session, the U.S. market have shown significant volatility and almost flattish move throughout the day. Of high volatility has been seen, and if we see on the close to close basis, then we can see that they were down significantly by more than 1%. Dow Jones and S&P 500 and Nasdaq was down by around 0.68%. And the major matter of concern and uh, matter to point out is today, as per the Indian Standard Time, in evening 6 p.m., U.S. jobs data will be declared, and its impact will be seen on the global markets, and on Indian markets it will be seen on on Monday. So if we closely see the US jobs data, if the jobs data will be good, then the Fed will go for more aggressive rate hikes as uh, good job data indicates good economy, and this might lead to more inflation, and uh, due to which in the next coming rate hikes, US Federal Reserve uh, can go for more than expected rate hikes. And if the jobs data will be bad or not as per the expectations and below expectations, then it shows that the economy is not doing good, and which leads to lower inflation also, which ultimately expected to lead to less aggressive rate hikes. So this is the overall expected impact of the US jobs data, which will be declared in today's evening. Its actual impact will be seen on the markets. On If we see the Indian markets, then it will be seen on Monday, and it will be seen on US markets in the today itself. And we need to be very careful in determining our trade according to that. Also, if you remember in our yesterday's episode, when the market was significantly up, I recommended that this is not the right time to go for long, that is for buying for the short term perspective, as in during the short term some volatility can be seen, and the volatility and the concerns are not yet over in the world. Therefore, do not get trapped in this 1 or 2 days of up move, and be careful. And it is in the yesterday's episode also, we advise not to buy for the short term, but rather you can buy for the medium to long term. And this is the time, and this is the opportunity we get in some time when we should grab these opportunities and accumulate good quality stocks in our portfolios. And I hope you liked our analysis. Now we will discuss about Indian stock market and what it is expected in the next few trading days. After a short break, keep uh, don't go anywhere and keep up with us. So welcome back to our episode, and now we will discuss about what it is expected in the Indian markets in during the next week. And if we see some parameters, then we can say that if we see the USD INR is at its all-time high and crossed the level of 82, and in fact seen the level of 82.40 also. So which is a very not very good situation for the Indian markets and Indian economy. And apart from it, the crude oil prices are also started increasing, and uh, the OPEC plus have declared to cut their productions. And although the US is uh, opposing that move, and but still the crude oil prices are showing good upward movement in past 2 days. So overall, other parameters are not good for the India. As for the economy point of view, the rising US dollar, that is the depreciating of the domestic currency, and increase in price of the crude oil, which is mm, the highest import commodity of India. Also, if we see the uh, FIS and DIS data for the yesterday's session, then we can see although they have not net sold in cash market, but they have not bought in a significant quantity also. They were almost flattish, and this is the overall sentiment of the Indian markets. Again, some profit booking can be seen on the intraday and short-term perspective. So it is advised to hedge your position if you are having big positions in the deliveries, that is for the cash, that is in the cash market in your portfolio. Then you can consider buying Bank Nifty put to hedge your position. As for the short-term perspective, some profit booking can be seen, and due to uh, the US jobs data, some volatility can also be seen in the today's market, as well as some gap up and gap down, gap up or gap down can be seen on the Monday session. Therefore, we need to be prepared for that. And uh, according to our analysis, the more chances is for the weakness point of view. So you need to be very careful. And although no major fall is expected, but still for the short term perspective, the markets are still volatile, and are expected to consolidate with a negative bias. So it is better to hedge your positions, but it is the right opportunity and right time to enter and start accumulated good quality stocks in your portfolio. You can consider HDFC Bank, as we have discussed it earlier also. HDFC Bank, Tata Motors, Steel Authority of India, Asian Paints. These stocks are expected to show good upward movement. For the medium to long term perspective, you can consider these stocks. So I hope you like our analysis, and do read our standard disclaimer also very carefully, that all this information and analysis are purely for research, training, and educational purposes. We are not encouraging any sort of buy or sell or trade through our recommendation or analysis. If you enter any trade, you should consult your personal financial advisor and your personal wisdom before taking any trade. And we will not be responsible for any profits or losses incurred by you. uh, so this is the standard disclaimer. I hope you liked our episode. See you in the next episode. Thank